And on top of the list, we've got Jubilant, because that's trading with a cut of about 7%. Mangalam, the big man there, Ajay Kaul, who was instrumental in setting up Domino's business, the one, who introduced that, 30 minutes, otherwise it's going to be free, delivery for you. He's hung his boots.
Indeed, Rima, the fact that he's hung his boots, the big man that you spoke about, that is negative in itself. The CEO and whole-time director, Ajay Kaul, resigning after 11 years of tremendous service to the company. He was indeed, as you rightly pointed out, instrumental in setting up their delivery business, which was the backbone of Domino's. Him stepping down is negative in itself, but the circumstances that he stepped down in is even worse, and which is why we're seeing a bigger reaction on the stock than we would have earlier or under normal circumstances. Because remember, 6 months ago, the erstwhile CFO Ravi Gupta also resigned, and then after that they had to hire the HT Media CFO, deputy CFO in his place. And if you look at their financial performance as well, the first quarter revenue growth as well as EBITDA margins have been the lowest since the IPO. SSSG, or same-store sales growth, has been the lowest in the last 7 quarters. EPS for the company has been at a multi-year low, so that is a big concern. Going forward, there are challenges for the company because, it is a low price, low selling price and high cost environment, so margins are going to be under pressure. The company is losing out on competitive advantage, which is waning due to the e-commerce players. And at the same time, the valuations of the stock, 55 times 1 year forward earnings, are not supportive at all. And that's why some commentary coming in from the brokerages as well. Citi, for instance, says that it is indeed the timing of the resignation, which is a negative surprise, and competition or competitive environment is high, with the share of stomach now being given more to other QSR segments. They have a sell rating on the stock. Nomura says that both the CEO as well as CFO's exits do not augur well for the company, and the transition going forward will be more difficult given the negatives SSSG environment that they are running under, and at the same time the issues which are being faced by the Dunkin' Donuts business. They too have a sell rating on the counter. Bank of America Merrill Lynch though has a slightly different view. They say that exits and uncertainty may have a negative impact in the near term, but their long-term thesis on the investment as far as Jubilant Foodworks is concerned remains, and they have a buy rating on the stock with a rather high target price as compared to the current market price of at around 1,320 rupees per share.
By the way, some news